Hello students, I hope everyone is preparing well for the upcoming examinations. Marathon of corporate laws and other laws are already available in YouTube. YouTube channel is caramharsha. Here I came up with a new video. This video is all about RTP paper 2 corporate and other laws. In this lecture I'll discuss all the amendments that are applicable for May 2024 examinations. Only two amendments are there. One is in prospectus chapter and the other one is management and administration chapter. Let's see the amendments first. Chapter 3, prospectus and allotment of securities, section 23. So section 23, it discusses about various modes of issue of securities. A public company may issue securities to public through prospectus or through private placement or through rights issue or bonus issue. Now coming to private company may issue securities through private placement, through rights issue or bonus issue. So originally two subsections are there in section 23. Recently two more subsections were inserted, subsection 3 and subsection 4. So what is subsection 3? Such class of public companies may issue such class of securities for the purposes of listing on permitted stock exchanges in permissible foreign jurisdictions or such other jurisdictions as may be prescribed. So this subsection is discussing about public companies. Such class of public companies may issue such class of securities, maybe equity shares or preference shares or convertible debentures or convertible preference shares, non-convertible preference shares, non-convertible debentures, whatever it may be. The central government is having power to prescribe such class of public companies and such class of securities. Why? For purpose of listing on permitted stock exchanges in permissible foreign jurisdictions. Previously, if a company wants to issue securities in a foreign country, they need to follow section 42, global depository receipts. So Indian company C Limited will enter into an agreement with overseas depository. This is a depository agreement. And C Limited will issue shares to domestic custodian bank who will possess these securities on behalf of overseas depository. Now overseas depository and domestic custodian bank will enter into an agreement called custodian agreement. Now based on this depository agreement and custodian agreement, overseas depository will issue receipts to persons resident of that country. So I call them as foreigners. Understood? Now foreigners will pay money in foreign currency in order to subscribe these receipts. These receipts are generally known as global depository receipts. In this manner, a company can mobilize foreign resources, simply foreign reserves. But this is a lengthy procedure, yes or no? And moreover, two more parties, overseas depository and domestic custodian bank, two parties are involved. Do you think these two parties will render services at free of cost? No, they will charge some remuneration, yes or no? So this is cost to the company. First of all, it is a lengthy procedure, and next one, cost making thing. Avoiding these things, now a public company can directly list their securities in foreign stock markets in foreign countries. Which public company and what are the class of securities, everything. Yes, who is having power to prescribe the class of companies and class of securities? Central government. Is it clear? Everyone. So such class of public companies may issue such class of securities for the purposes of listing on permitted stock exchanges in permissible foreign jurisdictions or such other jurisdictions as may be prescribed. Very recently, in the year 2024, yes, central government prescribed rules with respect to section 23 subsection 3. Now you can see, the class of companies were defined in a negative manner. Following these companies, except these companies, any public company can list their securities in foreign countries. So what are those companies which are prohibited from listing their securities in foreign countries? First one, section 8 company. Next one, Nidhi company. And the next company is company limited by guarantee having a share capital. So section 8 company, Nidhi company, company limited by guarantee having share capital. Next one, outstanding deposits. Company has outstanding deposits accepted from the public as per chapter 5 of the act and rules made thereunder. Next one, companies having a negative net worth. Companies having a negative net worth. That means assets less than liabilities. Company assets less than company liabilities. It indicates negative net worth. Yes or no? Next one. Company which has defaulted in payment of dues to any bank or public financial institution or non-convertible debenture holders or any other secured creditors. So any public company which makes default with respect to payments of dues to any bank, public financial institution, non-convertible debentures, and any other secured creditors. Next one, a company which has made an application for winding up under this act. Next one, a company which has defaulted in filing of an annual return under section 92 or financial statements under section 137 of Companies Act within specified period. So these 7 companies were prohibited from listing their securities in foreign stock exchanges or foreign countries. Understood? Next one, permissible jurisdiction, International Financial Service Center in India, and permitted stock exchanges, India International Exchange, NSE. Next, International Exchange. So 7 companies were prohibited from listing their securities outside India. No need to remember these company names, just for knowledge purpose I discussed with you. Is it clear, ma? So section 23 subsection 3, central government is having power to prescribe class of public companies who can issue and who can list their securities on permitted stock exchanges in permissible foreign jurisdictions or such other jurisdictions. Next subsection, the central government may by notification exempt any class or classes of public companies referred to in subsection 3 from any of the provisions of this chapter. This chapter means prospectus and allotment of securities. Chapter 4, share capital debentures. Section 89, 90 or section 127. 89, 90 is all about beneficial ownership, significant beneficial ownership, and section 127, failure to distribute dividends within the stipulated period. And a copy of every such notification shall, as soon as may be after it is issued, be laid before both the houses of the parliament. So central government by notification exempt particular class or classes of public companies which were referred in subsection 3. This exemption is with respect to provisions of chapter 3, chapter 4, section 89, 90 and section 127. But before giving that exemption, yes, after issuing that notification, it should be laid down before both the houses of the parliament, Lok Sabha and Rajya Sabha. So this is all about section 23 amendment. Clear? Next one, section 89, 90 with respect to chapter 7, management and administration. See, rule 9, companies management and administration, second amendment rules 2023. In rule 9, after sub rule 3, the following sub rules shall be inserted, namely sub rule 4, 5, 6, 7, 8. So these 5 rules, 4, 5, 6, 7, 8, these 5 rules were newly inserted. Original provision is, original provision. Let me tell you original provision. Now, whenever a person acquires shares in his name without beneficial interest, or whenever person acquires shares with beneficial interest, but not legal interest. Sima, holding shares, here a person who is holding shares is said to be having two types of interest. One is legal interest and the other one is beneficial interest. Understood? General presumption, the person in whose name shares are registered is the legal owner as well as beneficial owner. Sometimes a person may hold shares on behalf of someone. That means he is having a legal interest, but he is not having any beneficial interest. He is not having beneficial interest. Let me tell you one example. 2 persons are there, Mr. Ram and second one, Mr. Mohan. Ram acquired shares of Reliance Industry Limited. Shares were registered in the name of Ram. But originally, all the benefits with respect to shares are transferred to Mohan. So Ram is holding shares on behalf of Mohan. Now Ram is a registered owner. Mohan is a beneficial owner. Now in this case, the registered owner has to communicate the same with company in form MGT4 within 30 days of getting registered ownership. At the same time, Mohan is required to file form MGT5 with company within 30 days after acquiring beneficial interest in the shares. A company, after receiving communication from registered owner and beneficial owner, company has to communicate the same with ROC in form number MGT6 within 30 days after receiving communication from registered owner and beneficial owner. So this is the original provision actually. Now the new provisions which were inserted are the company must designate someone to communicate this information with ROC. The company has to designate someone to communicate the same matter with ROC. Now who can be designated? Who can be named so that the person will be held responsible for communicating the matters related to beneficial ownership and significant beneficial ownership with ROC. So who can be designated? The first one is a company secretary. A company secretary. If there is a requirement of appointment of such company secretary under Companies Act and the rules made thereunder. If there is any requirement, yes, company must have a company secretary. Now that company secretary may be a designated person. In case no company secretary, then key managerial personnel, managing director, whole-time director, manager, CEO, CFO. Understood? In case if company is not having company secretary, company is not having KMP, then every director may be a designated person. Understood? So who can be a designated person? First, company secretary. If no company secretary, then KMP. If no KMP, then every director of the company. Until a person is designated as referred under sub-rule 4, the following persons shall be deemed to have been designated persons. Who? Company secretary. If no company secretary, then every managing director or manager. So no managing director, no manager, no company secretary, then every director. Understood? Every company shall inform the details of designated person in annual return. If company changes the designated person at any time, it shall intimate the same to registrar in e-form GNL2. GNL stands for general. GNL2, it's a general intimation. GNL2 specified under companies registration offices and fees rules 2014. Understood? So company may designate any person for the purpose of rule 9. Now who can be designated? Come on, tell me who can be designated, ma? First one, company secretary. If no company secretary, then KMP. If no KMP, then every director of the company. Until company designates someone as a designated person, until company appoints someone as a designated person, company secretary shall be the designated person. If no company secretary, then managing director or manager. If no managing director, then every director. So who is the designated person? Yes, that thing company has to furnish the information in annual return. Company has to furnish the details of designated person in annual return. And any changes in designated person, yes, company has to communicate the same with ROC. Form number GNL2. Understood? These two amendments completed. One is prospectus related amendment and the other one is management and administration related amendment. Clear, ma? Everyone. Next, part 2, question and answers. So we are having two case scenario based questions. And then few multiple choice questions are there, and then we'll discuss descriptive questions. Starting with case scenario 1. Golden Limited is a listed company which is incorporated in 2013, having its registered office at Delhi. Registered office is at Delhi. Corporate office is in Noida. It is registered with an authorized share capital of 20 crores divided into 2 crores equity shares of 10 rupees each. The paid up share capital of the company is 10 crores divided into 1 crore equity shares of 10 each. Authorized share capital how much? 20 crores. Paid up share capital how much? 10 crores. Next one. The company is in construction activities like construction of buildings, roads, etc. On 8th January 2022, the company incorporated a wholly owned subsidiary D Limited. So D Limited is a wholly owned subsidiary to Golden Limited. So first Golden Limited, that is having subsidiary D Limited. So date of incorporation 8th January 2022, which is involved in supplying of construction materials like steel, iron, cement, bricks, etc. D Limited elects to choose to prepare its first financial statements for the period from 8th January 2022 to 31st March 2022. Generally, if a company is incorporated on or after 1st January, then the first financial year closure date shall be 31st March of following year. Understood? So if a company is incorporated on or after 1st January, then company's first financial year closure date will be 31st March of following year. So in this case, general rule, as per general rule, company was incorporated on 8th January 2022. As per general rule, first financial year closure date will be 31st March 2023. However, company decided to prepare its financial statements for the period 8th January 2022 to, just wait, 8th January 2022 to 31st March 2022. Possible, sir? Yes, possible. Yes, possible. If company wants to follow it, it can follow. No problem, no deviation. Understood? It can't extend the period beyond 31st March 2023. Maximum financial year closure date shall be 31st March 2023. It can't go beyond that. But it can prepare financial statements up to 31st March 2022. There is no issue. Next one. On 2nd January 2022, Golden Limited incorporated a new wholly owned subsidiary, E Limited, for providing project management consultancy services to its customers as well as parent company. Now one more subsidiary company, that is E Limited. E Limited. Incorporation date 2nd January 2022. Okay. Next one. On 5th January 2022, Golden Limited through its subsidiary E Limited acquired 100% partnership interest in XYZ and Co. partnership firm. So through its subsidiary E Limited, yes, it acquired a partnership interest in XYZ and Co. XYZ and Co. Next, E Limited elects to choose to prepare its first financial statements for the period from 2nd January 2022 to 31st March 2023. No problem. Just now I told you the general rule. What is the general rule? If a company is incorporated on or after 1st January, then company is required to prepare financial statements for the financial year and the closure date will be 31st March of following year. Yes or no? So here the decision of the company is acceptable. No deviation. And conducted its AGM on 16th AGM 2023. What is the due date for first AGM? What is the due date for first AGM? Within 9 months from the closure of first financial year, every company shall conduct a first AGM. Of course, this rule is not applicable to one person company. So now what is the general time limit? 9 months. 9 months from the closure of first financial year. So here the closure of first financial year is 31st March 2023. To this add 9 months. So the due date for conducting first AGM is 31st December 2023. One doubt. Can ROC extend due date of first AGM? No. ROC can extend the due date of subsequent AGM by 3 months. But for first AGM, ROC had no power to extend due date. Clear? On 1st July 2022, The subsidiary company D Limited incorporated a new wholly owned subsidiary F Limited. So D Limited is having a subsidiary F Limited. Just wait. Yeah. So this company incorporated one company F Limited, but this was incorporated on 1st July 2022, right? So let me, yes, 1st July 2022. So this is with respect to financial year 2022-23. Financial year 2022-23. Whereas D Limited, E Limited were incorporated in the financial year 2021-22. Each and every point is important for answering multiple choice questions. Clear? Golden Limited prepared its standalone financial statements for the year 2021-22 and presented before Board of Directors of the company on 25th August 2022 for their approval, and the same were adopted by the shareholders in the AGM held on 2nd September 2022. Adoption of financial statements in the AGM held on 2nd September 2022. Golden Limited prepared its standalone and consolidated financial statements for the year 2022-23. This is with respect to financial year 2021-22, and this paragraph financial year 2022-23, and presented before the Board of Directors of the company on 20th August 2023 for their approval, and same were adopted by the shareholders in the annual general meeting held on 26th September 2023. On the basis of above facts and by applying the applicable provisions of Companies Act 2013 and the applicable rules therein, choose the correct answer of the following MCQs given herein under. The first one, what is the last date for conducting AGM of E Limited? E Limited. So E Limited date of incorporation, E Limited date of incorporation is 2nd January 2022. E Limited date of incorporation 2nd January 2022. If a company is incorporated on or after 1st January, then financial year closure date shall be 31st March of following year. That means 2023. Add 9 months. What is the due date for first AGM? 9 months from the closure of first financial year. Add 9 months. So the date will be 31st December. Just wait. Okay, 31st December 2023. So D is the correct option. D is the correct option. Clear? Next, what is the due date for conducting AGM for Golden Limited for the financial year ended March 31st, 2023? So with respect to financial year 2022-23, they are asking a due date of AGM. See, subsequent AGM shall be conducted within 6 months from the closure of financial year. 6 months from closure of financial year. The maximum time gap between two AGMs, shall not exceed 15 months. Shall not exceed 15 months. Every year, company has to conduct one AGM. So satisfying these three conditions, you need to fix the due date of AGM. So what are those three conditions? Within 6 months from the closure of financial year, and the maximum time gap between two AGM shall not exceed 15 months. Next one, every year, one annual general meeting. Now, previous annual general meeting. Look at the previous annual general meeting date. 25th August, sorry, 2nd September 2022. You can read this paragraph one more time. AGM held on 2nd September 2022. So, previous AGM date is 2nd September 2022. Add 15 months. Add 15 months. Now, 2nd October, November, December. Yeah. 2nd December 2023. This is one time limit. Next one, within 6 months from the closure of financial year. Closure of financial year. Closure date is 31st March 2023. Add 6 months. So 30th September 2023. Every year one AGM. Yes, 2023. What is the last date for 2023 calendar year? 31st December 2023. Out of these three dates, whichever is earliest, you have to consider. Out of these 3 days, whichever is earliest, you have to consider. So earliest date is 30th September 2023. 30th September 2023. Next, the Companies Act 2013 provides that in addition to standalone financial statements, company shall also prepare consolidated financial statement which shall also be presented in AGM. Accordingly, consolidated financial statements of Golden Limited for the financial year ended 31st March 2022 includes financial statements of. So they're asking for financial year 2021-22. They are asking for financial year 21-22. If you observe case scenario carefully, one company that is F Limited incorporated in the financial year 22-23. Only F Limited was incorporated in the year 22-23. Remaining companies, D Limited, E Limited, and partnership interest in XYZ and Co. All these three interests, Golden Limited got in the year financial year 21-22. 21-22 itself, it is having interest in three entities. In financial year 22-23, one more entity, interest in one more entity is added. So with respect to financial year 21-22, three entities plus holding company. Financial year 21-22, so holding company Golden Limited as well as three entities, D Limited, E Limited, XYZ and Co partnership firm. So C is the correct option. C is the correct option. F Limited, wrong option. The reason is F Limited came in the financial year 2020-23. F Limited is not there in financial year 21-22. That's why D is a wrong option. Next, fourth question. The Companies Act 2013 provides that in addition to standalone financial statements, company shall also prepare consolidated financial statements which shall also presented before AGM. Accordingly, CFS, Consolidated Financial Statements of Golden Limited for the financial year ended 31st March 2023 includes now all entities: Golden Limited, holding company, D Limited, E Limited, F Limited, XYZ and Co partnership firm. In consolidated financial statements, you will find standalone financial statements of Golden Limited, that is holding company, and as well as all subsidiary companies, joint venture companies too. So Golden company, D Limited, E Limited, F Limited, XYZ and Co partnership firm. So yes, you have to consider financial statements of all these entities. D is the correct option. Understood? Question 3 is with respect to financial year 21-22. Question 4 is with respect to financial year 2020-23. Understood? So you have to pay a lot of concentration. Each and every point in the case scenario is important to answer multiple choice questions. Understood? Small amount of negligence, it costs you marks. It definitely costs your attempt. Understood? So pay attention. Next one, please select which is the correct option or which is the most correct statement. Golden Limited had given a notice for holding AGM in Mumbai. First paragraph, if you observe, registered office Delhi, corporate office Noida. A public company can conduct AGM at registered office or at any place in the city, town, village where registered office is situated. Yes or no? The company registered office is situated in Delhi. So Mumbai is a wrong option. Mumbai is a wrong option. Golden Limited had given notice for holding AGM in Delhi on Monday 26th September 2023 at 11 a.m. So looking at this option, all the aspects are correct. Registered office option is there. Monday 26th September, it's not a national holiday. 11 a.m. that is during business hours. So all aspects are correct. And let me look at other aspects too. Other options. Golden Limited had given notice for holding AGM in Noida, corporate office. Noida is a corporate office. Company has to conduct AGM either at registered office or place or at any place in the city, town, village where registered office is situated. So Noida is wrong option. Golden Limited had given the notice for holding AGM in Delhi on Monday 26 September at 8:30 a.m. 8:30 a.m. wrong aspect. Business hours means any time during 9 to 6, 9 a.m. to 6 p.m. So commencement time of AGM shall be between 9 a.m. and 6 p.m. It should not start before 9 a.m. It should not start after 6 p.m. Understood? So D option is also incorrect. Now, what is the correct option? B. B is the correct option. Clear? With this one case scenario completed. Next, case scenario 2. OMX Software Private Limited is a private company and having its registered office in Bangalore and is a wholly owned subsidiary of OMX Software Incorporation situated in USA. So this is a company incorporated outside India. Company incorporated outside India. Mr. Rajat Kapoor, Mr. Shubham, Mr. Peter are the directors of OMX Software Private Limited. Mr. Rajat and Shubham are Indian residents while Mr. Peter is a non-resident and stays in USA. Mr. Peter is also a director in company incorporated outside India. Rajat left India on 2nd November 2021 for the purpose of looking after the business of a company incorporated outside India. Mr. Rajat came back to India on 12th February 2022 to meet his family and left India on 26th February 2022 and went back to USA to look after the business of OMX Software Incorporation. Mr. Rajat once again visited India on 25th August 2022 and stays in India for the whole year. So reading this paragraph, they are going to test you with respect to person resident in India, person resident outside India, person resident in India, person resident outside India. So what is the general rule in order to call a person as person resident in India? His period of stay in the preceding financial year, his period of stay in the preceding financial year shall be more than 182 days. Yes or no? In the preceding financial year, his period of stay, if it is more than 182 days, then we can call that person as resident in the current financial year. Understood? But there are some exceptions. If a person who is leaving India for the purpose of job outside India, business outside India, or for uncertain period, no intention to stay abroad for an uncertain period. So if that person falling in these three categories, even though his period of stay in the preceding financial year is more than prescribed period, but still he will be considered as non-resident from the date he leaves India. Understood? So Rajat left India on 2nd November 2021 for the purpose of looking after business of OMX Software Incorporation. So for carrying business activities outside India, for carrying business activities outside India. So the moment he left India, that is with effect from 2nd November 2021, with effect from 2nd November 2021, he is considered as person resident outside India, simply a non-resident. A non-resident. Of course, he visited India in the same financial year to meet his family, not for the purpose of job, not for the purpose of business, or not for uncertain period. Only to meet his family, he visited India and again he left. He left India. Next, he came to India on 25th August 2022 and stays in India for the whole year. So here the intention of the person is not clear. Whether he came to India to live in India for uncertain period or not, we are not getting that clarity in the question. So you can make an assumption. You can make an assumption. So he came to India with a period to stay in India for uncertain period. Understood. Next one, OMX Software Private Limited has availed a consultancy service from a company situated in US for development of software. See here, consultancy services are of two types. One is with respect to infrastructure projects and the other one is with respect to development of software development. Other than infrastructure. One category infra, other category other than infra. Clear? Why? These both categories had different limits. Two categories had two different limits. That's why I'm telling you. You can avail consultancy service with respect to infra projects or other than infra projects. For infra projects, there is the limit of 10 million USD. For other projects, 1 million USD is there, right? For the purpose of rendering service to its customers situated in India. Mr. Rajat had purchased a residential property in USA on 27th April 2022, which was self-occupied by him for his residential use. So when he acquired the property, 27th April 2022. As on 27th April 2022, what is the residential status of Mr. Rajat? What is the residential status of Mr. Rajat? Non-resident. See, he came back to India on 25th August 2022. That means before that period, before 25th August 2022, he is a non-resident. So he acquired a property outside India, that is in USA, outside India, when he was a non-resident. When he was a non-resident. Now, based on these facts, let's solve multiple choice questions. Considering the provisions of FEMA Act 1999, which of the following options correctly determines the residential status of Rajat Kapoor? Mr. Rajat Kapoor to be treated as resident in India for financial year 22-23 and 23-24 since he stays in India for more than 182 days. For financial year 22-23, whether he is a resident or non-resident, it depends on financial year 21-22, financial year 21-22 and period of stay in that year. Yes or no? So period of stay in financial year 21-22. But if you look at the facts of the case, it was very clear that in the financial year 21-22, in the financial year 21-22, Rajat left India. He went to USA for carrying business operations. So 21-22, clearly he was a non-resident. Clearly he was a non-resident. Now with respect to 23-24, yes, we can consider him as a resident. Why? In the financial year 22-23, his period of stay is more than 182 days. He visited India on 25th August 2022, right? Now calculate the period of stay in India for financial year 22-23. So August month you'll find 5 days, 5 more days. September 30, October 31, November 30, December 31, January 31, February 28, March 31. You calculate this total duration, it is more than 182 days. Yes, for financial year 23-24, he is a resident. But for financial year 22-23, we cannot call him as a resident. Why? He left India for carrying business operations in the preceding financial year. So he's a non-resident. The wrong option. Mr. Rajat Kapoor to be treated as non-resident in India for financial year 22-23 since he left India for the purpose of carrying business of OMX Software Incorporation, and he will be the resident for financial year 23-24. Correct option. Correct option. For financial year 23-24, just now I told you, he is a resident. Why? His period of stay in the preceding financial year is more than 182 days. So this is the correct option, everyone. Next, Mr. Rajat Kapoor to be treated as non-resident for financial year 22 and financial year 23-24. Wrong option. And I told you very clearly, based on assumption, I'm telling you B is the correct option and C is the wrong option. What is the assumption? So here, the intention to stay in India was not given. So I assume that he will continue, he will stay in India for a period which is uncertain. So based on that assumption, B is the correct answer. Or else C would be the correct option. Really, I'm telling you, C would be the correct option. So based on the assumption, B is the correct answer. Next one. 7th question. Considering the provisions of FEMA Act 1999, how much amount can company remit outside India? So here they are availing services with respect to software, not infrastructure project. Not infrastructure project. Here they are availing service for a project which is a software. So in that case, without approval of RBI, you can remit up to 1 million per project. How much? 1 million per project. So the correct option is option A. It's not 1 lakh, it's not 2 lakhs, it's not 2 millions. In case of infra projects, the limit is 10 millions, 10 million USD. Clear? So option A is correct answer. Next one. Considering the provisions of FEMA in respect of purchase of residential property by Rajat in USA, which of the following statement is correct? So options, they're asking you whether it is a current account transaction or capital account transaction. See, what is a capital account transaction? It's a transaction which alters residents' assets, resident liabilities, including contingent liabilities outside India, or non-residents' assets, non-residents' liabilities in India. Any transaction which alters residents' assets, liabilities, including contingent liabilities outside India, or non-residents' assets, liabilities in India, then such transaction is treated as capital account transaction. Understood? At the time of acquisition of the property, at the time of acquisition of residential house property, Mr. Rajat is a non-resident. Mr. Rajat is a non-resident. And this residential property is situated outside India, not within India. It is situated outside India. So non-residents assets, transaction which is altering non-residents assets outside India, it is not a capital account transaction, first of all. Non-residents assets in India, non-residents liabilities in India. Now, any transaction altering, affecting these assets and liabilities, we can call it as a capital account transaction. We can call it as capital account transaction. But here the person is non-resident for that financial year and the property is located outside India. So this is not a capital account transaction. And one more thing, person who acquired properties outside India when he was a non-resident, FEMA provisions will not affect that transaction. Why? First of all, he is a non-resident and the asset is located outside India. Suppose if he is a resident and if he is acquiring property outside India, then FEMA provisions, definitely you need to comply FEMA provisions. At the time of acquisition of property, he is not a resident and the property is located outside India. So none of the provisions of FEMA 1999 shall apply to that transaction. Is it clear, everyone? Everyone. So let's choose the correct option. Purchase of residential property by Rajat is a current transaction, current account transaction. Next, Mr. Rajat has to sell his property before returning to India. No, there is no such restriction. There is no such restriction. Next one, purchase of residential property by Mr. Rajat is neither a capital account transaction nor current account transaction. So C is the correct option. C is the correct option. Why? Transaction is not happening in India, first point. And transaction is not done by a person resident in India. Transaction is not happening in India. And next one, transaction is not done by a person resident in India. So therefore, FEMA provisions are not applicable to the transaction. I told you, right? So C is the correct option. Next one, purchase of residential property by Rajat is a capital account transaction. Already I told you, these all are incorrect options. Only C is the correct option. Next, ninth question. Bhavesh, Yash and Chirag incorporated a limited liability partnership for doing the business of trading of timber under the name Solid Lacquered LLP. Chirag has shifted his residence from 12 Block C, Kamla Nagar, Agra to 808 Sector 1, Bodla, Agra on 16th November 2023. So there is a change in residential address of one of the partner. Chirag informed the firm about change of his address on 20th November 2023, sending a written notice. Now, by which date LLP is required to file a notice with registrar or within 30 days of changes? Within 30 days of changes, LLP has to communicate the same with a registrar. So accordingly, the correct option is 16th December 2023. When changes happened? 16th November 2023. Just add 30 days. 16th December 2023. Is it clear? Everyone. Everyone. Next question. Drug Software Company Incorporation, a company incorporated in Australia, proposes to establish a place of business at Mumbai. A company incorporated outside India wants to set up a place of business in India. So we call it as a foreign company. The list of directors includes Mr. Arun, Managing Director, Ranveer, Director, Ramesh Malik, Director, Nawaz, Director. Ms. Lavina has been appointed as Secretary of a company. It is to be noted that Mr. Ramesh Malik, Mr. Nawaz, resident in India, are the persons who have been authorized by foreign company to accept on behalf of company service of process, notices or other documents required to be served on foreign company. That means these two people, Ramesh Malik, Nawaz, they are authorized persons in India. They are authorized persons in India. In relation to company's establishment, you are required to enlighten the drug company INC with respect to whose a declaration will be required to be submitted to registrar for not being convicted or debarred from formation of company in or outside India. So the general rule is whenever a foreign company, whenever a company incorporated outside India wants to establish a place of business in India, then the directors and authorized person in India has to furnish a declaration. The declaration is like this: none of the directors of the company, authorized signatory in India, has ever been convicted or debarred from formation of companies and management in India or abroad. Are you getting my point? None of the directors of company, authorized signatory or authorized representative in India has ever been convicted or debarred from formation of companies in India or outside India and management in India abroad. Now, yes, we are having how many parties total? Here we are having 5 parties: Arun, Ranveer, Ramesh Malik, next Nawaz, and Lavina. Lavina is not a director, and Lavina is also not authorized signatory. Lavina is just a secretary. What I told you, directors and authorized representatives. So, except Lavina, all other people should file a declaration with ROC. That means Arun, Ranveer, Ramesh, Nawaz. So come on, choose the correct option, ma. Arun, Ranveer, Ramesh, Nawaz. So what is the correct option? D is the correct option. Lavina is there, so that's why option A is incorrect. Lavina is there, so option A is incorrect. Option B is incorrect, and option C is not complete. It is speaking about authorized representatives in India. I'm telling directors of the company as well as authorized representatives in India. So option D is the correct answer. So with this multiple choice questions also completed. Next, descriptive questions. Ram Private Limited is the holding company of Lakshman Private Limited. As per the last balance sheet, as per the last profit and loss account for the year ending 31st March 2023 of Lakshman Private Limited, its turnover was 1.8 crores. Paid up share capital was 80 lakhs. So private company turnover 1.8 crore, share capital 80 lakhs. The board of director wants to avail the status of a small company. So right now limits of small company: turnover 40 crores, paid up share capital 4 crores. Since turnover is within the limit and paid up share capital within the limit, and moreover it is a private limited company, so this is a small company. Like this you will write answer in your examination and you'll end up with getting 0 marks. Definitely you'll end up with getting 0 marks. So don't look at the limits, guys. Don't look at the limits. Read the question completely, at least 2 times, then you'll get a clarity. See, if you observe carefully, this is a holding company of another company. Ram Private Limited is holding company of another company. To avoid a status of small company, just looking at the limits is not sufficient. Certain category of companies, even though they satisfy limits, they are not considered as small companies. Holding company, subsidiary company, Section 8 company, statutory company. Did you remember these names? So these companies, holding, subsidiary, Section 8 company, statutory company, even though they fall within the limits, they're still not considered as small company. If you write answer like this, you'll get complete marks. Understood? Everyone. So first you need to write the provision of small company. Next, you need to write analysis. In analysis, you link up the provision with facts of the case. Conclusion: yes, it is not a small company. Yes, it is not a small company. In this manner, if you write, so you will definitely get 5 to 6 marks out of 6 marks. Next one. Prakash and some of his friends are members of Focus Limited, a company with a paid up share capital of 1 crore. Focus Limited, public company, paid up share capital 1 crore. They all intend to propose a resolution at the forthcoming general meeting of the company, which is going to be held in CP New Delhi. That is the place where registered office of the company is situated. Kindly provide guidance to Prakash and his friends on the requisite minimum paid up share capital they should hold to initiate a members resolution. Circulation of members resolution. For this, they should possess a requisite paid up share capital. How much, sir? 1/10 of paid up share capital. So what is the paid up share capital? 1 crore. Now Prakash and his friends should possess at least 10 lakhs paid up share capital. Then only they can initiate members resolution. And what are the other requirements that Prakash and his friends need to keep in mind for moving a members resolution? Very simple. First, they need to post members resolution copy to the company. And what is the time limit, sir? If they want resolution to be passed at the meeting, then they should provide the copy of a resolution not less than 6 weeks before general meeting date. For other matters, 2 weeks before general meeting date is sufficient. Understood. And that requisition, that members resolution should be signed by the persons authorizing it, and those persons should possess not less than or at least 1/10 of paid up share capital. Let's see the answer. Let's see the answer. So 1/10 of paid up share capital means 10 lakhs worth of share capital carrying right to vote. Next one, other requirements. 2 or more copies of the requisition are required to contain signature of all the requisitionist. The requisition must be deposited by them at a registered office of the company. In case of requisition requiring notice of a resolution, then it shall be deposited by them not less than 6 weeks before the meeting. Other cases, same to be deposited not less than 2 weeks before the meeting. A sum reasonably sufficient to meet the expenses to be incurred by Focus Limited in giving effect to proposing the resolution shall also be deposited by Prakash and his friends along with the requisition. So these are the other requirements. See, just observe the pattern, how they are testing how they are asking you, how they are testing the concepts. So simply mugging up the concepts alone is not sufficient. You should have a conceptual clarity. No need to remember entire provision. I'm telling you, no need to remember, no need to mug up. I'm telling you, no need to mug up entire provision. Just understand it. Just analyze it. That's it. If you remember 1 or 2 points in that provision, you can answer this question. Understood? So what I'm telling you is, don't mug up the provision. Understand the provision. Why? Question is getting asked on any part of the provision. On any part of the provision. And if you forget that part of the provision, you'll end up with writing wrong answers. And it will cost attempt. Clear? So that's what I'm telling you. Understand the concept. Next one. PQR Limited operates as a manufacturing company generating a turnover of 150 crores and holds an outstanding loan of 75 crores. First of all, what is the nature of company? Private Limited. What is the turnover? 150 crores. And what is the outstanding loan? 75 crores from a public financial institution solely in the previous financial year with a total loan availed of 110 crores. What is the total loan availed? 110. However, 35 crores were repaid during the same financial year. Now the balance is 75 crores. 110 minus 35, 75. The company's board has delegated the authority to CEO to designate an internal auditor to conduct internal audit. However, the CEO believes that the company is not legally obligated to have an internal auditor. Analyze the accuracy, the new CEO's perspective by referring to the provisions outlined in the Companies Act 2013. What would be your response if the board of directors wants to appoint Mr. Nagendra, an ex-employee who is also a qualified chartered accountant, as an internal auditor? So two things we need to answer. One is applicability of internal audit. And second one, who can be appointed as an internal auditor? First one, applicability of internal audit. Second one, who can be appointed as an internal auditor? So with respect to private company, applicability of internal audit, we need to ensure two limits. One is turnover 200 crores in the preceding financial year. The second one is outstanding loans 100 crores. And this limit, this 100 crores limit, you should not check on the closure date. You should check at any point of time, on any particular day, at any particular time. If company total borrowings is 100 crores or more, that's it. Internal audit is applicable for the next financial year. Are you getting my point? So at a particular point of time, total borrowings of the company is 110 crores. Total loan availed, how much? 110. So that's it. Internal audit is applicable. CEO perspective is incorrect. Next one. Mr. Nagendra, appointment of Nagendra as internal auditor. Yes. So who can be appointed as an internal auditor? Answer is even an employee can also be appointed as an internal auditor. Understood. So need not be a qualified chartered accountant holding certificate of practice. So need not be a practicing chartered accountant. Can be any person. Even he can be an employee too. Understood. Everyone. So CEO's perspective is incorrect. And appointment of Nagendra as an internal auditor is correct proposal only. Next one. So just look at the answer. Turnover 200 crores or more. Outstanding loans and borrowings from banks, public financial institutions, 100 crores or more. 100 crores or more at any point of time during the preceding financial year. Clear? Next question. Question 14, right? Yeah. Governments of Tamil Nadu and Andhra Pradesh collectively hold 60% of paid up share capital of Orange Limited. So obviously Orange Limited becomes government company. Why? 51%, more than 51% condition. At least 51% condition is satisfied, right? 51% condition is satisfied. The audited financial statements of Orange Limited for financial year 2022-23 were presented at its AGM convened on 17th August 2023. However, pending the comments of C&AG on the said accounts, the meeting was adjourned without adoption of the accounts. Therefore, company did not file its financial statements with ROC. Afterwards, on receipt of C&AG comments on the accounts, the adjourned AGM was held on 20th September 2023, whereat the accounts were adopted. Therefore, Orange Limited filed its financial statements relevant to financial year 2022 with Registrar of Companies on 29th September 2023. Examine with reference to applicable provisions of Companies Act 2013 whether Orange Limited has complied with the statutory requirements regarding filing of accounts with a registrar. So the answer. So what provision is telling? In case of original AGM, if financial statements were not adopted, then within 30 days, company has to file them as unadopted financial statements with ROC as provisional. ROC shall consider them as provisional financial statements. Sorry, unadopted financial statements. Unadopted financial statements, and they will be considered on provisional basis. Once financial statements got adopted in the adjourned AGM, once again company has to file the same financial statements with ROC. This time those financial statements shall be categorized as adopted financial statements. Understood? So here company filed only adopted financial statements. It didn't file unadopted financial statements. Yes or no? Hence, Orange Limited has not complied with the statutory requirement regarding filing of unadopted accounts with registrar, but has certainly complied with the provisions by filing adopted accounts within the due date with the registrar. Next, 15th question. 15th one. NOP Limited, since its incorporation in 2002, is engaged in production of premium quality glass bottles. According to the financial results of the company as on 31st March 2023, net worth of the company was 90 crores and turnover was 510 crores. 510 crores. The company proposed to accept the deposits as on 1st February 2024, which would be due for repayment on 30th September 2028 from the public for expansion and redevelopment programs of the company. First of all, this is a public company and its turnover exceeded 500 crores. Even though net worth is within the limit of 100 crores, but turnover has exceeded 500 crores. Therefore, it becomes eligible public company. An eligible public company is permitted to accept deposits from public. Understood? Next, furthermore, company has accepted a loan of 1.5 crore from Mr. P, director, and loan was to be repaid after 24 months. Okay, the company in its books of accounts records the receipt as a loan under non-current liabilities. At the time of advancing loan, Mr. P. Kishore affirms in writing that such amount is not being given out of funds acquired by him by borrowing or accepting the loans or deposits from others, and complete details of such loan transaction is furnished in the board report. Any amount received from the director in the form of loan or deposit shall not be treated as deposit provided the lending director has to furnish a declaration stating that the borrowed funds, whatever the funds given to the company, are from his savings, not from borrowings, not from accepting the loans or deposit from others. And company has to company has to report the same in board report. If these two conditions are satisfied, then amounts received from the director is not treated as deposit. not treated as a deposit. On the basis of above facts, answer the following questions. Whether company was eligible to accept deposit from public? Yes, eligible company, it can. What is the criteria for acceptance of deposits and tenure for which deposit can be accepted? Maximum tenure is 36 months. Whether tenure decided by company was in accordance with provisions of Companies Act? So company decided tenure. What is the tenure? 1st February 2024 to 30th September 2028. So 24 11 months, 25 12, 26 12, 27 12, and 28 9 months, 36 56 months. The duration is 50, 24 11 months are there. 25 26 27 and 28 30th September, that means 9 months. So total if you calculate 36 45 56, not possible. Maximum duration is 36 months only. Company can accept deposits for a tenure not exceeding 36 months. So here the proposal of the company is not tenable. With reference to the loan advanced by Mr. P. Kishore to company, state whether same to be classified as a deposit or not. Not a deposit. Why? He furnished a declaration and company also reported the same in board report. Let's see the answer. Just in the instant case, turnover of NOP Limited is a 510 crores, hence it is eligible to accept deposits from public. I told you. And tenure maximum how much, ma? How many months? 36 months. 36 months. So here you can see is not valid. The maximum period of acceptance of deposits cannot exceed 36 months. Hence, it is not in compliance with the provisions of Companies Act 2013. And second one, I told you, amount received from P. Kishore shall not be treated as a deposit. Only 5 questions were left. Come on. Question 16. Fine publishers registered in Tokyo began operating in India during the financial year 2009. Company incorporated outside India, Tokyo, operating in India, having a place of business in India. The company has duly submitted all necessary documents to the registrar within a specified due date. On 1st March 2023, Fine Publishers has shifted its principal office in Tokyo. Is Fine Publishers required to undertake any steps due to changes in address of principal office? Give your answer in reference to provisions of Companies Act 2013. If for the first time when they are coming to India and they are starting business in India, so within a stipulated period, they have to furnish information to ROC. And whatever changes happen in the information they filed previously, so those changes shall also be filed with the ROC. Understood? So the answer is yes. Yes, the foreign company has to furnish the same, changes of principal place of address, or changes in principal place address with ROC. You can see the answer. Accordingly, Fine Publishers is required to submit to registrar the new address of principal office in Tokyo of the company within 30 days of such alteration. Understood? So with this Companies Act related questions completed. Companies Act related questions completed. LLP Act 2008. Mohit is a creditor of ABC LLP. He has a claim of 10 lakhs against LLP. However, assets of LLP are valued at only 7 lakhs. Now, Mohit seeks to hold the partners of LLP personally accountable for the shortfall of 3 lakhs. Under the provisions of LLP, can Mohit demand for the deficit from the partners of ABC LLP? The answer is no. Why? Creditors to LLP are not creditors to the partners. Creditors to the LLP are not creditors to the partners. Therefore, creditors can't claim amounts from partners. Creditors can't claim amounts from personal assets of the partners. Of course, if any partner had not paid contribution amount, had not paid agreed amounts to the LLP, yes, that partner is liable to pay contribution amount to the LLP. That's it. So their liability their liability becomes zero upon contributing whatever amounts they promised. Understood? Once they pay contribution amount to LLP, their liability comes to an end. Until and unless they pay contribution amount, they are liable only for contribution amount. Clear? Now, can Mohit demand for the deficit from the partners? The answer is no. Next one. General Clauses Act. Yogvir Singh has a mango orchard at a Manchanga village, Bilaspur. The orchard has more than 100 mango trees. Yogvir Singh has sold orchard along with all the mango trees. Explain in the light of provisions of General Clauses Act whether sale of trees will be considered as sale of immovable property. Yes. Sir, trees, sir. Hey, look at the definition of immovable property. Read the definition of immovable property. Land, immovable property. Things attached to the land, immovable property. Benefits arising from land, also treated as immovable property. Accordingly, trees, fruits, until you separate them. Until you separate from land, trees, fruits, next crops, everything comes under immovable property only. Now, if you take timber, it is already separated from the land. It is already taken away from the land. Now, it is a movable property. It is not an immovable property. Now, here, sale happens, entire orchard. He sold entire orchard along with mango trees. Now, sale of trees definitely considered as immovable property. So, question 18. Question 18. Hence, mango trees are immovable property. Clear? Next, last but one question, question 19. What does the principle of reading the statute as a whole imply in interpretation of statutes? Explain with the help of an example. Reading the statute as a whole, it's an internal aid, internal tool for interpretation of a law, for interpreting a provision, for interpreting a statute. We use it as one of the internal tools. Understood? Now, while reading a particular provision, if there is any ambiguity, that ambiguity can be resolved when you read the entire statute as a whole. For example, concept notice is there in Companies Act 2013. Notice is there. Now, company shall give not less than 21 days clear notice to the members of the company with respect to annual general meeting. So before AGM, yes, before AGM. So not less than 21 clear days notice shall be given. Now, generally, when you read that, when I read that paragraph, I got a confusion. So, notice is nothing but intimation. It can be either in oral or it can be in writing. Now, there is a confusion whether it is in oral, whether it is oral notice or it should be a written notice. Now, when I started reading section 20, so if a company wants to serve any notice to the members, it should be done through registered post, acknowledgement due or registered post, or it can be delivered through other intermediaries. So doing anything, yes, placing a notice in the hands of members of the company, yes, it is also valid service of notice. Or notice can also be served through electronic means. Now, when you read section 20, so it is very clear that notice should be in writing only. So oral notice is not sufficient. So here notice should be in writing. So this clarity you will get when you read statute as a whole. Understood? Suppose if the provision is very clear, so notice of AGM shall be given in writing, then there is no confusion at all. Then no need to refer section 20 or all other sections. Are you getting my point, students? When you read statute as a whole, ambiguity can be eliminated. You can avoid ambiguity and you can interpret it correctly. Next one. Mr. Shivesh, an Indian national, desires to obtain foreign exchange for the following purposes. First one, remittance of $50,000 out of winnings on a lottery ticket. It's a prohibited current account transaction. Prohibited current account transaction. No person can withdraw money for carrying prohibited current account transactions. I'm sorry. No person can withdraw foreign currency. Correct. No person can withdraw foreign currency for carrying prohibited current account transactions. Not possible. Answer is not possible. $1 lakh for sending a cultural troupe on a tour of USA. So here permission is required. Central government approval is required. Ministry of Human Resources Development, and there is a department, education and culture. There is a department for education and culture. So you need to get approval from that department. The ministry is Ministry of Human Resources Development. So after getting a permission, after getting approval, yes, you are permitted to withdraw foreign currency for carry this transaction. And there is no limit on approval. So even $1, you need to take a approval. Advise him whether he can get foreign exchange and if so, under what conditions. So that's what I discussed with you. So with this RTP for May 2024 examination completed. Clear?